and welcome to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
I am doing amazing. How are you doing?
I am amazing as well. Thank you for asking. Judd, how are you?
I'm doing good. Welcome back.
It's so nice to be back with both of you because I so look forward to our shows together. You share such amazing information with the viewing audience. I know things have been very busy in the office, so let me just ask, Judd, has it been very busy for you lately?
It has been absolutely amazing. We have had such a great response from the show, not only existing clients that I think it kind of reinforces for them all the things that we're doing, the referrals we see from them, as well as all of the people that we've seen come in from the show, and to get those second opinions that we talk about, to get that analysis that we discuss. And again, in some cases, they become wonderful new clients of ours, and in some cases, we part as friends as promised.
Let's talk a little bit about that today. Stewart, what does a financial plan look like?
Well, I think a financial plan, the most important part of it really is communication, right? And whether it's a written plan or whether it's something, in our software, at the end of the day, what's really important is to make sure that those needs, the client's needs, are communicated appropriately to the advisor. And that's why it's really, really important to make sure that you have an advisor that you can communicate with, that you're comfortable with, etc. I always jokingly tell people that if you don't like me on this TV show, you're not going to like me in person. There is no difference between who I am here and who I am in person. So if you don't like me, go ahead and call Judd. He's a little different than me.
I'm way better in person than I am on the TV show. So.
Right? So no, but I think it's really important to communicate. I think that's the key, is communication, because life isn't static. Things change. We go in different directions. And your plan has to be adaptable to whatever life throws at you. I think that, I always use sports analogies. I'm a big sports guy. Judd, not so much. But, I always use, sorry, just exaggeration here. But no, I always use the example of, quarterbacks. And, John Elway, one of the great quarterbacks, obviously, he always, he had a set of plans on his wrist, right? And so if he was expecting a certain defense to happen, but then they called an audible and the environment changed. Listen, I think Terrell Davis, best running back that the world's ever seen, but I don't know if they didn't have a plan that he would have performed as well, right? But the reality is, if you have a plan, you have a much better chance of blasting through that defensive line than you do if you're just winging it. If all of a sudden John Elway went out there and said, hey guys, let's go ahead and have a good time, and whatever happens, well, they'd be crushed, right? But because everything was figured out, they had a plan, they were able to succeed because of that reason. I think the same thing holds true when it comes to your financial plan. Have a plan, and then the odds of success go up dramatically.
Absolutely.
Well, and just kind of jumping on what Stewart was saying there, and I believe you have a game plan and you've got plays on your sleeve, but I'm not the sports fan that you are. But I think what he's saying is you want to have a running play and a pass play and something to do on special teams and that long first down. The idea is a financial plan should address your taxes. It should address the risk you're able to take in retirement. It should address income and needs analysis. So it should have all of those pieces, big picture, really showing you what that financial plan can do for you. And then, like Stewart made, you have to be able to change it. It has to be adaptable and flexible to your situation and what the world throws at us.
Thank you so much. I wanted to ask you, Stewart, how important is it working with a fiduciary? Let's talk about that a little bit today.
Well, I think the environment has changed. I think that in the past, it's been okay to deal with brokers, with stockbrokers, because, a stockbroker, and the difference between a broker and a fiduciary is this. A broker gets paid for transactions. They're also paid generally by their brokerage firm. A fiduciary is not allowed to receive undisclosed conflicts of interest or commissions that are undisclosed. as fiduciaries, we are not allowed to receive commissions at all on the security side. We are completely fee-based. So you know that when we're calling, we're not trying to sell you something in the stock market. What we're trying to do is make sure that you realize that, hey, there's some changes occurring and we need to talk. And so I think the one thing we realize as fiduciaries is that our clients love hearing from us. I don't know if they love hearing from Judd, but I know they certainly love hearing from me. I usually come with good news. But at the end of the day, I think it's real. It's really. Sorry, I apologize again.
They do love hearing from me because I'm in charge of the Christmas party. So
that's true.
Well, there you go.
That's true, and hopefully we can do another one this year. Here, you know, we're down 2 in a row, and so hopefully this year we'll have a good one. But no, I think it's really important to have someone you can communicate with, that you can talk to, that is willing to have that open, availability.
I think so too. And Judd, let me ask you, tax planning, how important is that when factoring into someone's retirement plan and what their goals are?
Well, and we use some different terminology with this, whether you're talking about the retirement stool and you've got the 3 legs and taxes being one of that, or, building a house and having the foundation there. But I believe it's just as integral as what you're invested in and what your time horizons are. And I think, as Stewart's mentioned a number of times, so many financial advisors either aren't able to discuss the tax side of it, or they're oblivious to it, or both. And because of that, we believe that it is an essential piece, because down the road, whether you're making 10% or 12% or whatever that might be, if you end up giving away 39% in income tax or a substantial amount in capital gains taxes, then what you're left with is a far smaller amount. And so the reason I think taxes are always such a good piece, because again, it's not what you make, it's what you keep when everything's said and done.
Absolutely. Stewart, outside of taxes, what other components go into a well-designed retirement plan?
Well, cash flow analysis. I think it's really important to make sure that the money doesn't run out. For example, we have some really sophisticated software that will take a look at, hey, expected rates of return, how much are you expecting to spend? We also can add pretty major life events into that cash flow analysis as well, because what we're seeing is that a lot of people never enjoy that money because they're so afraid of running out. And if we can give you the comfort of knowing that, hey, you're going to be okay, well, then it's time to start enjoying retirement, isn't it?
Absolutely. Judd, you have a very special offer to the viewers at home today. Do you want to tell them what that's going to be before we open up the phone lines?
Absolutely. Well, so everybody out there watching today, we're offering you a free complimentary portfolio analysis and financial plan. Come in, sit down with Stewart or I. Let us know what it is that you're looking for. Second opinion, we obviously recommend that a lot. No cost, no obligation there, but come in, we'll look at your portfolio, make sure that you're aligned with the rest of the market, make sure you're aligned with where your risk and reward profile is, and again, just let you leave our office in a better spot, or at least having a better handle on how you're set up and equipped for retirement.
So again, providing peace of mind.
Absolutely.
Judd, thank you so much. Stewart, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. If you have questions about how to plan your perfect retirement, let Stewart and Judd help you along that path. If you're not going in the right direction, wouldn't today be the proper time to know? And again, all you have to do is pick up the phone and call 833-652-7829. We have to take a very short commercial break, but when we come back, we're going to have so much more about how to plan your perfect retirement. Please stay tuned.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having today, talking about so many important topics, all about retirement planning and how to have peace of mind going into retirement. I have to kind of scoot back a little bit, though, Stewart. I want to talk to you about people that are investing. So working with people that are investors, how is your company different from, let's say, someone else down the street?
Well, I think the difference between us and a lot of other advisors is that it's not just us picking the funds ourselves. It's not just Judd picking the mutual funds or the ETFs that he thinks are right for you. What we do is a little bit different. We use some of the biggest and best money managers in the world, in my opinion, and they all have different approaches. One, for example, we use an algorithm money manager, and if we were to compare them to, a static portfolio, like there are companies out there that just say, hey, buy the S&P 500 and you'll outperform. And that is what we would call a static portfolio, where you're buying and holding long term. What a tactical portfolio is, and we have a graphic to show the difference, a tactical portfolio basically assesses where we are in at least our algorithm portfolio looks from a tactical approach at where we are in the economic cycle. And everybody knows, obviously, that if if we're going into a recession, that there are different investments that are going to perform than if we're in expansion, for example. And as you see from the chart here, there are different investments that do better in those different environments. And Cynthia, I'll just tell you this: that the difficulty is, where are we at, right? So sometimes, hindsight's 20/20, right? Sure. It's always to say, oh, we should have bought Bitcoin at this price or Microsoft at this price. And in hindsight, yes, I'm the smartest investor in the world in hindsight, right? And true story, I am, I swear. But I'll tell you this, and we're seeing that a lot with our clients, is that, they're letting their kids day trade on their accounts because their kids are geniuses. But let me just break something to you guys. The market has quadrupled over the last 12 years. Mm-hmm. A blind chicken could have done well in this environment. Now we're starting to get into the crazy part where we're seeing super high volatility again. We're seeing massive shifting in tax policy. And so change is in the air. And most people realize that. I don't know if the party's over or not, but I do know this, that if you don't have a plan that's really well thought out with a really high-end money manager that's really doing what they can to keep you out of the way of risk, you're exposing yourself to a lot of potential downside out there. We're at the highest peak in market history. And absolutely. I think it's really important to understand, you buy low and sell high. Yeah. And where are we right now?
Yeah. Hi, absolutely. I have to ask you a question, Judd. How important is it to have a second opinion? Let's say someone's in the viewing audience today and perhaps they think that they're in a great place. Well, how important is it to have a fresh set of eyes, if you will, take a look at someone's portfolio?
Yeah, I think it's of the utmost importance for those people who already have a plan in place and you get a second opinion and you don't need to change anything, then you're in a great spot. No harm, no foul. But for that person who gets that second opinion and realizes, wow, I need to adjust my spending or I need to reduce my risk, for someone like that, it could be similar to, again, going to the doctor for a routine exam and finding out that you have some, treatable but serious illness. Sure. The sooner that you go in and you get that plan, the better off that you're going to be. And I think that's where, like Stewart tries to emphasize, we get people, new clients that come to us for maybe stuff other than just financial in the first part, but they'll say, oh, well, I've done great over the last 12 years. Well, everybody's done great over the last 12 years. One of the expressions that Warren Buffett uses is a rising tide lifts all ships.
Absolutely.
So if you see that the stock market's up 400% over the last 10 years and you're up 80%, well, 80% is a great growth rate, but you didn't keep up with the rest of the market. So the question is, was that because they underperformed, or was that because you just took less risk, or a combination of both? So again, that second opinion really lets you know where you are, apples to apples, with your portfolio, with your risk, and compare it to the rest of the market or those similar asset classes.
Stewart, let's talk about someone who maybe has come into the office recently that you were able to take a look at their portfolio, give them a second opinion, and how were you able to help guide them in a different direction?
Well, so I think what we're seeing is, obviously from a money management perspective, we have a way different, perspective.
Okay.
But I think I have a specific client that basically she's done an amazing job. She's a flight attendant that has worked her tail off for a long time, and she has all her money in these what we call pre-tax environments, which is all 401k and IRA. So she did her job. She put all her money away. But what she didn't realize was that when she retires, that money coming out is going to create a massive tax implication when it comes to her investments. Not only that, she was basically all in S&P 500 funds, which has done really well for the last decade. But what happens if the market does what it did between 2000 and 2012? I mean, basically the S&P made nothing for 12 years, right? It took until 2012 for the S&P to get back to where it was at the end of 1999. So are you prepared to take that kind of risk to lose half of what you have if the market's correct, and to have to wait for another decade for it to come back? Maybe, maybe not. If you've got 20 years to work, not as big of a deal. If you're within retirement age within the next 5 years, 10 years, I think it's worth calculating that risk. It's worth getting a second opinion of what kind of risk you're taking.
Sure. In your opinion, Judd, how important is it for someone to know what their risk tolerance is? I know a lot of people, they may say, you know what, I take moderate risk. But what does that even mean, Judd?
Yeah, I mean, I think there's two pieces to that.
Okay.
Because, again, there's a personal philosophy. What is their risk tolerance?
Yeah.
How much are they willing to lose? And then, of course, there's how much risk can you take in your portfolio and not have to be a greeter at Walmart or somewhere else when all your other friends are retired and playing golf, 5 days a week. So what we really want to look at is, again, when the market goes up a certain percentage points, how much are you willing to lose?
Okay.
And it's also going to depend on where the money's at. Because, again, if you're in a 401k at work and you've got a few years left, well, maybe we don't want to take as much risk with the bulk of your money that's already sitting there. But the money that you've got that's going in every 2 weeks from your paycheck, you can take a little more risk with that, because if the markets go down over time, you're going to dollar cost average in at a lower rate. But again, it really comes back to how much money can you afford to lose and still have a successful retirement, and then how much are you willing to lose? And sometimes the magic answer is somewhere in between.
Okay, all right. Thank you, Judd. Stewart, you have a very special offer to the viewers at home today. Can we talk a little bit about that before we open up the phone lines?
Yeah, absolutely. Thanks, Cynthia. What I would say is give us a call at 833-652-7829, and what we will do for you today, for the first 10 callers, if you call us today, right now, what we'll do is we'll take a look at all of the risk that you're currently taking. When Judd was talking about risk, the one thing we realize is most people don't know the risk that they're taking. And we'll look at all of the fees that you're paying. We'll look at the upside and downsides of what you have. And if what you have is great, we'll let you know it. If it needs some work, we'll also give you a few suggestions, and we'll always have a solution for every problem we present.
Gentlemen, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. We know you have a lot of questions about how to retire comfortably, retire with confidence, and again, have the retirement of your dreams. All you have to do is be one of the first 10 callers today. That number is 833-652-7829. We have to take a very short commercial break, but don't go anywhere. When we come back, we're going to have so much more when we return.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having today. And I have to ask you a question, Judd. Let's talk a little bit about some common pitfalls, if you will. Are you seeing some pitfalls when it comes to people planning for retirement?
Yeah, I would certainly say that, people get certain ideas in their heads, and without having anything to educate them or change their mind. The number one thing that I see when it comes to, especially where the markets are right now, all-time highs, a lot of people have made very good money. And we talked about risk earlier, so if we're talking about retirement accounts and things, but I'm really right now, the pitfall I see is when it's non-IRA assets that have long-term capital gains in them. And the pitfall that I see is that people are more afraid of the taxes than they are of the losses in the portfolio. And I think that comes back to why you want to work with someone who can look at both. But the example I would give is a client has $500,000 in a non-IRA account, and it's gone up $100,000. So they have a $100,000 long-term capital gain. Well, if they were to sell all of that, not that they have to, but if they were to sell all of it, they're going to pay roughly 20%, 15 to 20% on that $100,000 gain, which is between $15,000 and $20,000. But they're afraid to sell because of those taxes. However, a 10% drop on that account, you're going to lose 10% of the $500,000 or $50,000 versus proactively paying the 15 or 20% in taxes on the gains themselves.
Wow, okay.
And I think, again, that comes back to people having misconceptions and not having someone to educate them and show them what the real numbers are.
Thank you, Judd. Stewart, what about you? What do you think another common pitfall that you're seeing with people?
I think what I'm seeing a lot now is people that are taking bad advice at the water cooler. We do have these people now that have, day traded on their own accounts, and now they're geniuses. And, I always, say a blind chicken could have done well in this environment, and it's true. For the last, decade, everyone's done well, just like Judd said. But one thing you have to remember is that just because the guy that works in the cubicle next to you has made money, it doesn't mean he understands all the nuances of why that happened and so forth. For example, we have a great local company here, Honeywell, for example. And, I remember having a client that said, oh, my friend said you should take the lifetime payout because of this, and you should take it at, as soon as you could. Well, what he didn't realize is that his friend actually worked for a different, predecessor company and had a different pension plan than he did. And so what we're seeing is everybody has different options, right?
Sure.
So your options may be completely different from the guy next to you. And at Honeywell, they have multiple pension plans, and not everybody has the same choices available to them. And what I would always say is assume that your person that's there trying to help you, your friends, they're just there chit-chatting. It's like our West Valley office. We've been there forever, and we have a ton of clients in Portobello and Sun City Grand, right in our West Valley office. And I'll have people that come in and say, hey, Harry told us that he made 27% last year. I only made 17%. How come you're not giving me the good stuff? Well, just remember, some of these golfers, man, there are some good stories that are told out there when the drinks start flowing and the stories start growing, and find an advisor you trust, find an advisor you like, and communicate with them. Enjoy your time with your buddies, but when it comes to financial stuff, it's generally not the right person to take advice from.
Absolutely. Judd, for someone who's in the viewing audience today and they're debating on whether they should pick up the phone or not, what kind of advice do you have for them?
Again, I would say pick up the phone. No harm, no foul. I know that we get people that watch the show multiple weeks and eventually end up calling us and coming in, and they're automatically put at ease. They realize that, hey, this is what they promised me. You come in, you get a first-class experience. We'll sit down. It's your time. We're trying to see if there's something that we can help you with, if there's a fit. Again, we'd love to earn that future job as your financial advisor. But the reality is you get to come in, you get to ask the questions, you get to show us what you're worried about, and we're going to show, as Stewart mentioned, we're going to give you, if you're in a good spot, we're going to let you know that. We appreciate loyalty. There are a lot of great financial advisors out there. We happen to believe that we do it better. We believe that the full picture that we provide with the taxes and the estate planning and the left hand knowing what the right hand doing are better. But that doesn't mean that people aren't in a good spot. And if they are, we let them know. We hope that if they come across a friend or neighbor who could use a second opinion, they send them our way as well. But I would say, give us a call. Come in, try us out, and if you end up not liking what you experience, Stewart's got a Facebook account. You can post some things too.
That's perfect. Stewart, how long does a first consultation typically take? I'm sorry.
Yes, and you can find me at Judd Carlson at Facebook.com. No, it's that's unfair. Here we go now. All right. So, we spend an hour with clients, and it's your hour. It's whatever the heck you want to talk about. If taxes are your concern, let's go over that. We're going to look at your portfolio. We're going to take a full view of everything you want us to look at. And it's funny because when you set an appointment after you call, we send you a follow-up email that says, hey, these are all the things we recommend you bring. And if you decide not to bring any of it, it's going to be a lot less helpful than if you brought it all. But really, it's your time. And you can use it however you want. And by the end of that meeting, you're going to know whether the chemistry is right, whether we're the right company for you or not. In either way, we'd be glad to help.
And again, it's all about getting to know the client. And what I love about both of you so much, obviously, your communication that you have with one another and how cute you are together when you make me laugh. But you also design a plan that's customized for each individual client that comes into your office. It's not cookie cutter. It's completely tailored to them. So, gentlemen, thank you for a very informative and, of course, entertaining show. I love my time with you. To the viewers at home, thank you so much for spending time with us again this week. That number to call is 833-652-7829. We know you have questions about how to plan your perfect retirement. Please don't miss the opportunity to call today. Be safe, be happy, be blessed, and we will see you back here 1 week from today. Thank you for watching.